Let's continue with the market conversation with the Vital Knowledge founder, Adam Crisafulli, though. Adam, it's great to have you back on. Okay, we can talk about chop and consolidation and digestion of the fourth quarter rally that we did see in equities. But is the trajectory more naturally higher from here? Maybe not in the near term, but over the medium term?
Yeah, I think it is. I think that you have, the big powerful forces from Q4, a lot of them are still in place. So you have resilient earnings. Now, I think there's an important distinction, which I'll touch on in a moment, between revenue and earnings. So resilient earnings, you have disinflation, and then on back of the disinflation, you have this big pivot in monetary policy. After 2 years of aggressive tightening, you're now going to have the start of monetary easing. On the earnings front, so that's kind of what we're going up onto in the near term as we get into the Q4 reporting period. You are going to see some revenue pressure because of disinflation, because of cooler growth. Companies are able to pull various different operating levers, including cutting costs, to help preserve earnings. But there are going to be some revenue hiccups. So we saw this late last year with Nike, with FedEx, as companies go through this new phase in the economy where price pressures are picking up and growth is slowing. But I do think that earnings will stay resilient. So I think that you're going to see the S&P above 5,000 by the spring. But like I said, there might be some hiccup as we get into this earnings season coming up with revenue.
The pivot piece of this, I mean, UBS coming out this week saying the pivot's fully priced. The market is now left vulnerable. Do you see it the same way in terms of that part of the equation and the role that the bond market is playing in terms of giving its cues to the equity market?
I think a big part of it's price, but there's still more to go. Like I said, I think we've had 2 years of aggressive monetary tightening. And in that time, the S&P hasn't moved at all on an absolute basis, and it's down meaningfully on a real basis. So as that turns, and it's turning globally everywhere except for really Japan, you're going to see central banks ease policy. And I think that's going to be a powerful tailwind. And it's not just on the funds rate. It's also going to be on quantitative tightening. And that's really been entering the monetary conversation in just the last 72 hours, call it, where you had an important comment over the weekend from Fed official Logan talking about how quantitative tightening, we're nearing the point where it could be slowed. The Fed's going to start to provide a lot more granular guidance on how that will unfold over the course of the year. And that's another important piece to the monetary easing story.
Adam, walk through this one with me, if you will, having to do really with bonds. It seems like it's more likely than before the Fed's not going to raise rates meaningfully, and we're probably unlikely to revisit October's highs for the 10-year yield. So in that case, what should investors do with bonds? Pick your duration. And then, I guess, what does that mean for the stock market eventually? But fixed income, I don't think we spent enough time on that.
I think that bond yields have further downside to go. In really, it's just going to be a function of the economy. I think you're going to have cooling growth coupled with ongoing disinflation, and that will help to fuel, a lot of what you saw in Q4. So rally in bonds and then a rally in equities. We're getting the CPI on Thursday. We're in this interesting period where headline CPI is going to reaccelerate a little bit. You saw that in Europe last week in December, and it's expected for the headline CPI on Thursday. But core disinflation is continuing, and this reacceleration in the headline is probably just going to be a temporary blip. And as we look out over the coming months and quarters, you're going to see that number continue to drift lower too, and that should place downside pressure on yields. The quantitative tightening also is going to be another tailwind for equities, for bonds, which should help push yields lower. On the fiscal front, fiscal issuance is going to stay very heavy, and that's going to be an offset. So you had a decent auction today. We get a 10-year auction tomorrow and a 30-year auction on Thursday. And you're seeing in Washington, there's really not any action being taken to meaningfully curb the deficit. So the issuance is going to stay very heavy, but you are going to see an offset on as far as the Fed's balance sheet is concerned.